Good morning. Just checking everything's working. Welcome back. Today is the 3rd of March 2026, and I'm going to go through my pre-market prep today. Before we start, we'd like to look at the news, see what news could potentially move the market. We don't have any high volatility events, but we do have some lower volatility events to keep an eye on just in case. Nothing really there, so probably we're going to have one of those days where market might just grind in one direction or something, or just go sideways. There's no real large orders. 6,500 is way below, so we've got nothing to worry about there. We're nowhere near that, but somebody thinks we might get down there because they've got 401 orders sitting at 6,500. We are seeing a bit of a move down today. I'm just going to flick over to my main screen where we can just analyze what we're seeing. So on my screen, we're looking at the S&P E-mini futures. I'm going to start off with the weekly, because it's always nice to see where we are from the long-term perspective. And we've been watching it for the last few weeks curve over a bit. Oh, I don't know what's going on there. That one there. Curving over like that. And then we're finally back down into that bottom of that pivot from about 5 weeks ago where we put in that indecision candle. Volume shelves, we're sitting right at one right now, slightly above. We also got one sitting down at this region here, and that's around 6,700. So obviously another psychological number, something to keep an eye on. But apart from that, we've broken that 6,850, 6,800 area. That's a key area we've been watching for some time, since the 1st of December when we kind of broke it and held it. And we haven't closed below that for some time. So let's just see where today ends. So let me just flick back to the daily. We're going to go down the time frames. Give me 2 seconds. Good morning, Sonny. Thank you for coming back. Welcome back. So the daily looks interesting as well. As you can see, we do have this curving over. We'll be looking at. I'm getting different. I'm not quite sure why I'm getting that come up when I'm trying to open my pen. These are the key pivots we've been watching. Are we going to close below that one? Are we going to close below these ones? That's the one from a few weeks ago, early February. So that's kind of what we're watching for. We've been looking for trend continuation. We've got this downtrend. We've passed through these key numbers, 6,900. That's our rejection point a couple of days yesterday. Good rejection there. 6,800, we kind of just sailed straight through that area. And then the next number is 6,700, which is down here. Happens to be a volume shelf. So just be wary of 6,700. That is an area to watch as well. Obviously we've got that 6,600 area as well, which is that 200 moving average. I'll just have a quick look. We're coming into unfamiliar territory now. We haven't been down here for some time, so it's just a matter of just working out where we are. That's the zone we are watching. We've got that fair value gap just there. So that's a little bit below, and that's sitting at that 6,700 area. So for me, 6,700 is a key area. We're right at 67, 65 right now, and potentially we could watch that area for potential bounce. We have reacted to all the other key areas pretty well, 7,000, 69, 68. So let's see where we are. So there's not really much really to look at volume-wise. We did have increased volume yesterday on that daily candle, but look at this, without the follow-through. I don't know what's going on. I think that might be my OBS trying to, must have been, my OBS is trying to record my screen or something. Oh, I know what it is. Let me close CapCut. I was editing some videos. Here we go. So, where were we? So we had this big green volume candle yesterday, kind of a bottom tail candle, as a topping tail candle, right through some key areas as well, 68.50, right through this big volume shelf as well. And then we kind of just gave it all back today in the post-market and pre-market. And we're right at yesterday's low. So yesterday's low is an area to watch for potential break and retest short. Volume shelves here, we've got this area down here, exactly where we're sitting right now. And then volume wanes off. So let's just drop down to the hourly and find out some levels, because there's not really anything exciting, apart from potentially we might be looking to break that pivot. That's the key area. That's to confirm this downtrend if we come back and retest that area. On the hourly, So as you can see, we pulled right back yesterday into 6,900, big key area, and there's a nice rejection after market. So that sold off quite nicely all the way through. We didn't look back at 6,800 yesterday. We came in, we bounced off 68, big move up, big move down. But this time there's nobody there to defend it. We lost it, came back into it again. Look at that for a great break and retest of 6,800 and 68,000. Sorry, 68,000. Yeah, that area there. Sorry, 6,800. But on my brain, I was just looking at Nasdaq a minute ago, putting some levels in on the premium on the Discord, and I was like putting in levels 2,500, and I was like, no, hang on, it's 25,000, and I've got the 25,000 still in my brain, so hence why I keep saying 68,000. 6,800. That's our key area today, and that's an area to watch. Keep an eye on that zone for another rejection. I do like it a lot. We don't have much volume to the left. We're just using psychological numbers for this. That's kind of an area. I'm looking at pre-market low, 67.40, break and retest short. If the opening range sets up down here, this would be a great opening range. We kind of had a pullback. We had a little bit of a resting period as well. I don't like seeing just continuous selling and then we're trying to sell further, because that rarely works. But what I like to see is a bit of a resting period down at 67.50. Let's see what happens when we get down there, whether we go sideways for, then we continue down. That's kind of the areas I'm watching today. That's pretty much it. And then the only bounce we can watch is at 6,700. I'm going to mark it up because there's an area to mark up on the chart. Let's just put it in 6,700, as that's kind of the next psychological number we're coming into. So be wary of that. Let's zoom out and see where that leaves us. Yeah, so we do have that volume shelf, as you can see here. Area confluence, tops and bottoms of pivots, and then kind of break and retest of that area. So it is an area to watch. If we're short, that could be a potential target. Good morning, Sunny. Good morning, May, and good morning, 212. Thank you for coming back. Welcome back. So we are actually, technically, we are in a trend day. I haven't said this for a long time. We're kind of broken out of this range. We're putting in a new low. We're below yesterday's low. We're outside just about, excusing that little pivot there, we're outside of yesterday, the weekly range as well. So, you know, treat it a bit carefully, but I'm going to be still looking to scalp, but I'll be looking also for some like maybe a runner, just to hold a runner or something. Keep an eye on that 6,700. Like I said, we are pretty well extended down at the moment. We're quite far away from the moving averages. So I do like the trending days when we are kind of hugging the moving averages and we're coming back in and then we're looking for continuation. So treat it as a ranging scalping day with a potential to maybe hold on to a runner, and that'll be great if we are looking for shorts. If we're looking for longs, which I don't have many plays for longs, then we're going back inside to yesterday's range, back inside this weekly range, back inside the daily range, and it gets tougher again. So for me, I want to look for a short. I like that 68,000 rejection. I think I'd even consider 6850 rejection as well. Maybe even 6,900 rejection again. As we know, as history repeats itself, these have been key areas. You can see there. You can see key areas there. And then 68, we held it, and then we came into it and kind of bounced from that area yesterday as well, and then we just lost it. And then obviously in the pre-market we rejected it. So that is the key area for me today. So the key psychological is 68, 69, 6850 and 67. Keep an eye on pre-market low. That's the areas as well to watch for the breakdown. So I think that is pretty much it, really simple. Looking for trend continuation, but it's, you know, we are still technically inside this weekly range. We haven't quite come out of it yet. Let's just go back to the weekly so we can see it better. You know, the tough part might be over. That's that bit where we found it really tough. We're inside that area there as well, and we're kind of inside this stage 3. We're still in a stage 3 at the moment. You know, we talked about stage 1. This is a stage 2 where we're seeing the uptrend. Stage 3 is kind of all of this zone when we just start going sideways. Maybe you could say that's more of a stage 3 up here, and then we're looking for a stage 4 to complete that cycle. And obviously we can't ignore these big volume shelves like that, volume shelf point of control, wouldn't it be great to get down to 6,000? So let's see what happens. Let's flick down to SPY next, down to the hourly. So SPY, big gap down, as you can see. We've got our pre-market low at 672. Look at that. That's a level we had marked up. And by no coincidence, the pre-market bounced at that point. Just shows levels, and especially looking at historic levels, works. And that was purely confidence and volume shelf. Tops of pivots, bottoms of pivots, bottoms of pivots, bottoms of pivots, and now a bottom of a pivot. So that's why these areas work pretty well. And you know, these areas, I literally eyeball them. I don't really go into too much accuracy. And that was, yet again, spot on. Look at that, pretty much smack bang on. Levels on SPY today. If we come back into yesterday's low, we can watch out for the rejection. Pre-market high, we do have a gap fill if we get above that, so potentially watch for the gap fill. Otherwise, trend continuation, break and retest of pre-market low. Again, if ORB sets up in that area, that would be a great ORB area for a short. I'm not a big fan of going long into all of this junk to the left. We said about that yesterday. I know it worked yesterday, but still not a big fan. SPX, look at that, 6,800, held that area yesterday. We came smack back into that, and a beautiful bounce. So again, that's why we keep an eye on SPX, but even if you don't trade it, the levels are pretty much key. We can see that area of confidence through the middle. Top level, 69, 69 there, 68 down there. So just be wary. We will be gapping down today, and we'll be below yesterday's low. We'll probably be close to that 68. So just be wary where we are today before we take any trades. We do not want to be going short into 68. We don't want to be going long into that 68. We want to be above it for the long, or below it ideally for the short. That's it. No other levels on SPX. Sorry, wrong button. Nasdaq next. So we've broken that pivot. We're not going close to that pivot yet. So for me, I do like this pre-market high area for a rejection just before we get into this big volume shelf to the left. So 24,700 is a rejection area. We've got a point of control sitting around 24,800. 24,800 is yesterday's low as well. And I also quite like the retest into that area. So if we move back up into that zone, I like it for the short. We can draw that trend line now as well, and that could probably set X marks the spot where that short could happen, 24,800, 24,700 area. And we are in a downtrend on the hourly, but let's go to the daily quickly. We don't look at the daily often on Nasdaq. And look at this, we are still inside that range. Oh, wrong button, that range there. So we're kind of holding that range, and you know, while we're inside that range, makes it tough. We've got the 200 moving average. We're a bit further away on ES, but we've got the big 200 moving average directly below. Is that a bounce area? Also a double bottom area. If we lose 24,000, by the way, 24,000 is a psychological bounce area as well. Last time we were there, we had that big reaction. So, but if we lose 24,000, let's look for the break and retest, and we'll be breaking outside of this stage 3 market box. So let's just keep an eye on a break and retest short. You know, it's looking good for the short. Not quite sure where we're going to go. That 24,000 is a big psychological area. We don't have a great deal of volume there, but we will be coming into volume if we lose it. So let's see what happens on Nasdaq. Back down to the hourly. 1 second. And the hourly. So I've got time. We've got loads of time. 18 minutes past 2. Nasdaq hourly. I like this zone. We just talked about that. 24,700. I like that zone for the rejection. Potentially yesterday's low as well. That zone, point of control, 2850. 25,000 above is a big psychological number. And then 2400 below is also a psychological number. Just keep an eye. That could either be a target if we're short, or it could watch that area for bounce. And that's pretty much it. Just be a bit wary. QQQ. Again, we've gapped down. I do like this zone here for the rejection. All the way down at 600. All the way up, should I say 600. 591, that's a zone I've got marked off. We were close to that in the pre-market. Let's zoom out and see why that is. Okay, it's just a confidence area of a volume shelf. tops and bottoms, probably an old historic level, bottoms of pivots, bottoms of pivots, bottoms of these pivots, close to those pivots there, and smack bang into it again recently. So let's watch for a bounce in that area. If we get below 592, then look for the break and retest short, and that's pretty much it. Want to play carefully. Wow, look at this. Oil is getting strong right now. Hopefully, when we talked about this trend line break here, and we're looking at that inverse head and shoulders pattern, the break and retest there, hopefully somebody took that. If not, somebody took that break and retest of that trend line there, because oil's strong at the moment. I've got it in my long term, but I didn't take it as a swing. We need to now zoom out to find some other levels, because we are... Oh, look at that. So that is our level. Let me just mark that up. We're right at $78. We've got a big volume shelf there. Loads of confluence, tops and pivots. So that's a key area. We are very extended, so it might break out, but it might have a fake breakout. Look for reducing volume on the breakout. But if we come back down into that zone, I do like it long. I like it to build a bigger position into that area to continue. You know, while we're so extended like that, look what happens when we extend like that. Last time, big push down. Last time, big push down. We don't generally get big extensions like that on oil. I know war is an exception, but just be wary. That's the level we've got marked in the sand. The point of control is pretty much down here as well, 74. You could keep an eye on that area for potential bounce if you're looking for trend continuation. But for me, that's too extended. Has to come back down into like yesterday's high or down into this area. This is a great area for a bounce. Look at that. We held it. We held it. We can see it kind of, the elastic band has been wound up. Bounce, 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 or reject, 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 and then boom, snap. So maybe the market was aware of what's going to happen in the Middle East. And that's why we've seen that just kind of doing that. I'm probably sure the market was aware something's going to happen. And then this is the catalyst, boom. And then if the big money, look at that volume as well. Look at all that volume. So for me, this could be ending volume. So just be a bit wary. You know, when you see all that volume, that's not retail sellers. That is big institutional money. That's institutional money just most likely selling into that area there. So just be wary of that. Gold is down 3% today, which was looking so good yesterday and the day before, and then they said, nah, I've given up the ghost on that one. Look at this volume shelf there. Let's see where that ends up. That's exactly where we are, pre-market low. It's an area I would probably watch for a bounce of these pivots. So keep an eye on 5,070 all the way down to 5,000. This is a zone we can watch for a bounce, that zone here. And that's it really. I'm not really sure about shorts unless we come all the way back up. I like these trend line breaks, so we can follow that all the way down probably. If we come all the way back and retest the underside of that trend line, yesterday's low, pre-market high, that area, and look for the rejection. That's all I'm watching for. Gold, RTY. See, I like, this is the type of patterns I like now. We see it just going chopping sideways for weeks and weeks and weeks. And then we see some weakness. Then we see a pullback with not much volume really, and then we see it sell down. So what would, and this is like any of these structures, I want to see it retest that area there. I want to see increased volume from sellers. This is the same for ES and NASDAQ as well. I want to see increased selling volume coming out of that area, pre-market low, to continue this trend down, and then we might start seeing a new market cycle, and that'd be that stage 4 we talked about back down. If we're looking for a play today, I like the break and retest a pre-market low only if it clears that previous pivot. Ideally, it would be nice to see it clear those pivots as well today. We have a volume shelf sitting down at 2,500. Keep an eye on that. And then psychological numbers. Sorry, 2,550 I meant, sorry. Volume shelf, where's that? 2,540 I meant, and then we've got 2,500 below. Just beware of that. YM next. Let me just have a look at YM. YM is kind of taking out those pivots. It's looking weaker, which I'd really like to see. We've got potentially a head and shoulders pattern. We've got this neckline. We came out, we retested it. 49,000 psychological number. We've lost it. We didn't hold that much yesterday. We came into it and rejected it. That's why we mark up these levels. Look at that for the rejection. 48,000 below is a bounce area today. So let's keep an eye on that. We can watch it for another bounce, or if we lose it, look for the break and retest short. For shorts, I do quite like the retest of this yesterday's low area as well. If we come back into that one, I like that because that looks more like a uniform breakdown then. And that's pretty much it. And finally, Bitcoin down almost 3%. Still sitting in the zone, so exactly the same plays that we've been watching for the last month and a bit. If we can get over that zone, maybe it's a breakout long. If we can break that downward trend line, it's a break and retest of pre-market low. But are we looking at an inverse head and shoulders pattern? Our neckline is quite clearly marked up at 70,000. Psychological number. If we get above 70,000, look for the break and retest long. And that is pretty much it. And we've got 5 minutes to go. I'm just having a look to see if there's anything else. No, not really. Yesterday I took 2 trades yesterday. One of them was the scalp we did live, and then later on I did this. And let's go back to my. It would have been nice, but this is where mind over matter comes into play, because I kind of bottled it, and I don't know why. It's because I was up, I was doing okay, I was green for the day, and I probably was going to walk. We had the opening range, which was that one there. That went and hit 3R in the end, so that was a great opening range breakout. Never came back into the break even. The entry would have been triggered in at that, on that candle there. Didn't even come back anywhere into drawdown. I think it got, maybe when it pulled back here, it's a bit of a dicey moment. But this is the play I want to talk about. So the opening range, I wasn't a big fan because it's going into overhead resistance. We had 6,900 above, and we had a load of junk from the previous day. But it was on increase in volume. It wasn't massive increase in volume, but it was an increase in volume. So that pretty much ticked it. It wasn't an A+ setup. It would have been a scalp setup anyway. Then we saw this setup. Look at that. That's a great little bull flag. But the importantly was the next setup. And then it pushed out on increased volume. So that was the entry on that candle there on increased volume. So that's a tick. That's a tick. That's what I like to look for on the ORB breakout. This is a perfect ORB breakout, other than the fact it was coming into overhead resistance. So that's why I wouldn't have taken it. Would have been better if it's actually coming into all-time highs, something like that, or in an uptrend. However, if you miss that, another trade we always look for is the break and retest of the opening range. And look how we held that opening range. Bottom tail, bottom tail, bottom tail. The buyers did not want to give up that opening range high. And then that was proven later on when we pulled back evenly. Look at that. We had four candles pull back on reducing volume. Really important to see that. That means there's lack of interest from buyers. If we had increase in volume, then it just wouldn't have been a play. And then the next entry on that green candle there wasn't as much volume, but it was a legitimate break. You really want to see more volume break out. So that's kind of why I bottled it a bit. But even this play never came back into its stop. So I went in, it came back, pushed up. As it started coming back in, I got out about here, and then obviously it went off and hit target. But that's how it is. I wasn't really feeling it for continuation, and it was past 11 o'clock as well, and I didn't really want to stay in the trade. But then obviously about half an hour, I looked back and went, damn it, it hit both the ORB target, and it eventually hit the break and retest of ORB target. But the 15-minute ORB is such an important place, and that, you can see that quite clearly here. You know, literally two bottom tail candles into that opening range high. Yeah, it's a tough one. Had it set up down here, I would have been all over it, because that would have been with the trend as well. So, and that's another reason it was against the trend. But we did have lots of big candles, but I wasn't also a big fan of the lack. We didn't have real big volume candles coming in, so it was one of those days where, you know, you take it and you just let it run and it grinds its way. Look at that. So that went and hit 3R, possibly even 5R, the ORB. I'm not quite sure. I think it was 3R in the end. And then that one there, small candle, easy 2R. So you just got to watch out for these, and then just try and be more, what's the word? there's a word I'm looking for. Less fearful. So I think I had fear of giving back profits. Here you can look at a left shoulder, head, right shoulder. That's our neckline. Oh look, a break and a retest of that neckline. It's not very well drawn. And then what happened next? We sold off. So again, key pattern to watch. I love these patterns. So now let's just go back to where we are. Let's get rid of that. Putting in a bit of a strong, Nasdaq's looking very strong at the moment. I took a long on Nasdaq, and my idea was right, but I got in. I had my stops a bit too close, and that did work in the end. So that was at the bottom tail candle. I was a bit early in. I took an anticipation entry on my top step account, and I took a couple stops, and I just took another win to get myself back to break even. So that's what I was kind of watching during the pre-market. I was just waiting to find that exit. Look at here. This looks good for a long already. I'm going to look for a long. Oh, I may have missed it. If it comes back, here we go. Now I'm long. Oh, I was a bit late in. Reason I like the long, we had very small negative deltas. We had positive. Okay, my first target hit. My second target hit. How about this one? Easy long. I'm now at break even. I didn't even get a chance to explain it. I'm so sorry. I just saw it. Sometimes you just have to take these trades. We had loads of positive deltas, very minimal negative deltas coming in. And so that's the reason I went long. I'm going to probably look to close it about now. No, it probably should have stayed in actually. It would have, I think it's doing okay. That's it. I was a bit too in. I didn't really prepare myself for it, but it's probably going to go. 68.70. I normally like to see what overhead resistance is before I get in, but this is just a dead easy long every day. Look at that. All that confidence, lack of sellers down here. We can see that. Let me just increase the screen size a bit so we can see what's going on. Okay, looks like my out was a good out. What I was looking at here, bottom tail, negative delta, no follow through. Positive delta, small negative delta, bottom tail, negative delta, positive delta, small negative delta. Look at these really small negative or aggressive sellers. There's no sellers down here at all. And even when there was sellers, it was met by buyers. So that's basically what caught my eye. And then I saw the positive deltas, and then I saw the break of this line here. That's why I got in. I was waiting. That's why I said I was chasing there, waiting for it to come back in. I'll only get in. I don't get in on red candles. I only get in on green candles. I'm going with the trend, only with the trend. And then that was quick, easy scalp. I don't even know what I made. I didn't even have my accounts open. That was $700, and I've got it over 1, 2, 3, 4, 5 paid accounts. What I've done today, I've changed things slightly. I've got 5 paid accounts. This is my trade copier. I've got 2 trade copiers now. I've got my normal one where I trade off the 7-minute copies to all of my accounts. This is for my ORBs. And I've got this one, I trade off my paid account, and then it copies only to my paid accounts. So that was 1, 2, 3, 4, 5, $700 per account. That's not bad for a few seconds work. I decided to copy my scalps because they generally work. They generally work, and they did again today. Look at that for a good out. So I'm glad I got out where I did. You know, looking for first signs of weakness when you're scalping. 2 negative candles in a row, and then with no follow through. There was lack of aggressive buyers up there, and that's why I got out. I can't remember when my out was. It's probably on that red candle. Where was it? I can't see it now, but around there somewhere. There it is there. So I think I got out there. So good out, good trade, and that's my scalping done for the day. So what I'm watching for now is the ORB plays, if they set up, and maybe my hourly levels. I've just changed my screen slightly because I always flick over to my other screen for cumulative delta divergence. I've just ditched the hourly because we know what the hourly is. We've been looking at it in the pre-market, and I've just put cumulative delta divergence and the 2-minute here. So my brain has not quite clocked it yet. I keep going back to my order flow screen, which is the only reason I go back, because I look at the large levels and I look at the cumulative delta, but we've got it here now. So when I'm trading live, you can see it live with me. So I've ignored the comments. I've not really been looking. Mayo, I just passed an eval. Great job. Big clap. Hard to pass the eval, so that's a great job. I don't know if anybody knows, if you trade Apex, they've just changed their rules. Probably for the better. I'm sure it is. The new Apex 4.0. Basically, they are giving you end of day trail and drawdown instead of intraday trail and drawdown, which means if you're holding onto a position, my brain works on holding and letting it run, even if it pulls back and hits me for break even. But say you are up $2,000 on a 50,000 account, and then you let it run back $2,000. You've just given back $2,000 worth of trade and drawdown. But on an end of day trade and drawdown, your trade and drawdown will be still at zero. You know, you wouldn't have had any drawdown, because even though you wouldn't have any profit, you wouldn't hit your trade and drawdown. I'm a bit mixed on the accounts, really, because I spent the last 3 years mastering trade and drawdown, and that's what you just saw me trade a minute ago. And it's only the last few months I've really capitalized on this trade and drawdown and trying to stop it from eating away at my accounts. I've had so many accounts blown. Well, not so many. I see people with thousands of accounts. I'm only up to, I think I've only had 20 paid accounts, and I've got 5 of them remaining. Sorry, what am I on? My last 27 paid accounts. So it's taken me almost 22 accounts to get used to this trade and drawdown. So I think Apex is great. It's definitely amazing for learning because you're not risking your own capital, and I highly recommend it. Let's just see whether we could have seen a bounce down here. This is looking very similar to what we had earlier. So we never get in at the bottom. Well, we like to get in at the bottom because you don't know if it's the bottom. We like confirmation. Negative delta, green candle for me, I wouldn't have got in. That wouldn't have been, you know, if I had a positive delta on a red candle, then that would have been more interesting. A negative candle on a negative delta on a green candle again. That's meaning we got lots of aggressive sellers, but the buyers absorbing that area. So maybe I might have been watching it. And then we don't have much aggressive selling deltas, -94, -58. And then we had a very few here. So I probably would have been looking around right here, because this would have been very similar to that last trade I took. -76 on a green candle, you know, with no negative follow through, barely any. I probably would have waited for the break of a pivot on a green candle. I only go long on green, short on red. My entry probably would have been, I don't know, even there I wouldn't have been a big fan. It would have worked. It wouldn't have been an A+ one. Aligned point control. Now this is what I would have waited for. Even though I look for the green lines, that is 3 in a row. That are kind of 3 in a row. We know that's a key area. Had we broken that area, here we go. This is exactly what would have really wet my lips. 2 3-point controls in a row within a space of 3 candles. So, and then I would have seen this aggressive buying imbalance as well. And then I would have been long probably on that candle, and that would have been a quick, easy scalp. Negative delta, that's what I like looking at. A negative delta on a negative candle on a positive delta. That gives you, maybe you might see that there's a bit of absorption there. Okay, well, I would have been out easy for 20 ticks. Where would a stop been? Would have been, let's just zoom out a bit. My stop would have been below that candle there, 67, 76. Wouldn't have come close. 81 it got down to, so it would have worked. Would have held on to it a lot longer than I would have wanted though. And here we are, we're back at the top again. So yeah, it would have worked. So that would have been a good trade as well. So you don't have to trade just to prove yourself or just to prove a trade works. And that's how I got really confident on doing these scalps. I was watching them every day for months thinking, oh, that would have worked. That would have worked, exactly what I just said then. But I just never fired the trigger. Here we got another aligned point control. Look at this, this is a great one. So we've got 3 there, 4 there. So technically that's a resistance area. 67, 87. Positive delta on a red candle, wouldn't have been a big fan of that. And are we going to hold this area? Not sure we're going to hold it. Small negative delta, so maybe. I'm not trading again. I've done my trade for the day. No, it didn't hold. So again, not ideal. And then, yeah, it might be one of those markets now. We are coming into previous range area as well in the pre-market. It makes it harder to trade through that. But we do have a nice positive delta. So the longs are still looking good. In my opinion, they're looking good. Unless we get aggressive sellers coming in. So this is just absorption. This is just mess. So you don't really want to mess around in this area. When it's like this, you want price. You want to see delta divergences look really, really straightforward and plain. You want to see price just putting in higher highs. You want to see deltas putting in lower lows, not like this. And then you want to see price kind of break that trend, delta continue down, and then that would be your entry on the price round there. That's how we play it. Not when it's looking really messy like this. It's very hard to play when it's like this. My paid accounts are all looking pretty healthy at the moment. A couple of them were down. Now they're all in the positives. I know one of them's just below 50,000. One's at 58,000. No, taking minus the 2,000 I just took out. So was that 56,000 roughly, that area? One's at 51. That's doing okay. Another one at 51. Yeah, so not too bad. I decided I'm going to copy to my paid accounts, because even though it's higher risk, because I'm risking 5 accounts now, maybe I might just interchange it and just maybe do 2 at a time. But I'm just working on this. This is what you use Apex for. You refine your strategies based on their rules and their new rules. I've not taken out any new accounts yet. I'm interested in the end of day trailing drawdown, but I spent such a long time literally cracking the trailing drawdown rather than the end of day drawdown that I don't know how it will affect my trade and my mentality. So, but I'm happy to keep. I think I've got about 15, 16, 17 eval accounts on the old system. So I'm going to try and keep them as long as I can. And you can trade up to 20 paid accounts. So even if I buy some more brand new eval accounts on the end of day trading drawdown, when they convert in paid accounts, then you can trade up to 20 paid accounts. But you can have more than 20 eval accounts. So you could stockpile with you if you're getting close to passing. Check the rules. I think they're trying to stop people stockpiling, possibly. That's kind of what I've been doing with mine, keeping the 20, because I bought them all at 90% and they renew at 80%. Some renew at 90%, so they're old legacy ones using old rules and old renewal fees, so it doesn't cost much to renew. The newer ones, they renew at 50%, which is about $90. I think I'm paying about $19 for some of these accounts. Look at this, talk about give it all back. Big top and tail candle. We don't like top and tail candles. And then big rejection. We were close to 68. We did say keep an eye on 68,000 for a rejection. Remember, we play zones. We don't play actual lines. So you could technically say that was within 6 points of 68,000. It was a rejection. Wasn't really any, what do you call it? Any setup up there, because you like to see it at least put in a double top or something. Didn't do anything. It just kind of whipped in, whipped out. Opening range is going to be set up in the next 2 minutes. We've got our first 2 candles. We've got the high. We've got the low kind of been set in this candle now. So remember, in the pre-market, I said what I'm looking for ideally for the opening range to be around pre-market low area. How far are we from that? Pretty far. So we're kind of holding 67.58, 67.40 is pre-market low area, 42 is pre-market low. So we do need, here we go, I'll leave pre-market low there. If we can set up around there in this candle, I'm not sure, we've only got 42 seconds, unless we have a lot of selling coming right now, then the range will be in. but we could, you know, the mid-range will be around about 67.70 area. So it could still break pre-market low. Here we go, this is what we want to see. And we've had our resting period. Remember I said I don't want to see market just go red, 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 and then into the opening range. On my right, we've got the 15-minute chart here. Here we sold off. Bit of a resting period here. And that's why we want to see it just rest in this zone around that 68.50. I've had that number in my mind for a long time. Comes out of my mouth without thinking. 67.50, another number. So opening range is now in. We don't want this opening range to break just yet. We want to sit there. We've got 5 minutes. We don't want a massive big wide range candle. It makes it harder. We're looking for a small range candle that takes out maybe a one which is about 10 points, which is 55 down to 45, maybe a little bit below 12 points. Using my risk of $400, 10 points would be 8 contracts short. So that would be an 8 contracts if I were to go short. Assuming we're using the numbers I just called out. That's a $400 risk. So my stop would be at the top of the candle that breaks the opening range, but we're not breaking it, we're holding that opening range low. Remember I said about that opening range low, or the opening range high is a key area, might be a key area today. Look at the cumulative delta as well. We've got aggressive buyers, we've got some aggressive sellers coming in. Now the buyers are back in control again. Bottom tail candle on the 2 minute. I don't trade 2 minutes. I know you see me trade the 10 range, which is like the 10-second chart or 1 second chart. I only take my trades off the 5 minute chart. These are my main day trades, not my scalps. So thank you, Mayo. Let's grow the community. I agree. So please do hit the like. Don't forget to smash that subscribe button as well. I'm just editing a video. I'm just trying to put together some of these scalp plays. So I'm just going back through my pre-market, trying to find the best ones and just putting it as a compilation video, because you know, they are all really, really decent scalps. And sometimes, like today, I had to take it without me explaining how I got into it. I just saw it and take it. Whereas I'd love to be able to describe it setting up and have plenty of time so we can all set orders up and take it how we want. But because it just set up instantly and I just had to go for it. But if we go back through the pre-markets, you'll see most of the time, I'm telling you in advance, this is the area I can see it setting up. Here we've got lack of buyers, here we've got lack of sellers, etc. So cry pick entered short at 67.72. Oh nice, so you're in it short right now. So remember, manage the trade, manage your stops, manage your risk. We've got that free. I do like this area up here. We've got the line point controls within a tick of each other. So that's a good place. Probably would have joined you on that short. We had lack of buyers. Let me just make this bigger, this screen, because if I am going to go back on YouTube, then it's better if I can do the videos full screen like this. So look at that, it's moving too quick for me to keep up. 2 contracts there, lack of buyers, no more interest up there. Then we had an aligned point of control. We had one just below, so I do like this area. That's like a resistance area. And then we lost it. We had a small positive delta, big negative delta, smaller positive delta, back into that resistance area we just talked about. Look at that, I like that a lot. We do have some aggressive buyers sitting there, so they could be trapped buyers sitting there. And then we lost it. If I was a trapped buyer, then I'd probably be looking to get out here, and you can probably see why it pushed down. Still lots of aggressive selling. You can see the deltas on these candles, more aggressive sellers than buyers. So cry pick, that's a great entry. Just 2 aggressive buyers there. We've got a engulfing candle as well, where we've got a bull engulfed by 2 bear flags. And then we come back down. There's still no reason. Hold this trend. If you're looking at the trend line, just keep an eye on this trend line. If you're trying to find an exit, only 6 aggressive buyers here. We do have some positive deltas coming in. but without the follow through. Important. Look at this, it's off the chart now. Let's just reset. We come into real time. So Premarket, that's a great short. I hope you take some profit down here as well. Look at this. Lots of aggressive selling, selling imbalances with lack of buyers. So this could be a big seller sitting there, or it could be a buyer absorbing all of this sellers. So keep an eye on what happens. So that's an area to watch if we break. We do have 3 almost aligned point controls within a tick of each other. So that is a resistance. So if I was to move my stop would be at 67.54 right now. We got a lot of buyers coming in now and sellers, so just be wary if you're short. Look at this big candle, massive positive delta. Remember that trend line? Keep an eye on the trend line around here, wherever you want to be. You know, you manage it how you want. I'm just saying what I would do. This would get me just keeping an interest on the market. And then we've got lack of buyers again, so probably wouldn't have been out just yet, but I'll be looking to trail out soon. So we've got some buyers coming back in again. Look at this big positive delta now. So, and we've got 2 aligned point controls at the bottom of the candles. That is a resistance. I look for point controls at the bottom of a candle on a reversal. The trend is now broken. Positive deltas coming back up as well. If I was scalping, I would have been out right down here. That would have been my out. Like I said, I've taken my trade today. I'm not looking to take any more scalps, but that's the entry there. Let's look at the rest of the charts now. Oh no, sorry, that's the trail down. Opening range. So we have got a valid opening range breakdown actually. I wasn't really watching it because I was just staring at the what was I staring at? I was staring at the order flow, which was really interesting to read. So let's just have a look at the algos. So the algos have gone short on both NASDAQ and it's gone short on ES. So these are the 2 algos I call them algos. It's an algorithm that's trading it, but it's not taking real trades. It's just using NinjaTrader. I'm building a server at the moment which will take the NinjaTrader alerts and it will take the trades for me on my TraderVate account. So that's my next project, to automate this. It's a shame you can't actually take trades automatically with TradingView. Or I'll just rebuild these scripts, the code into NinjaTrader. That's probably the best way. So that looks good. So I might, you know, I'm not a big fan of going short into pre-market low, and now you know why. Look at that, it bounced exactly off that pre-market low. So if you were on the ORB short, hopefully it works for you. Remember, I only look for A+ setups. It's with the trend. That's a confirmation. We've broken the opening range on volume. That's another confirmation. I do like seeing a topping tail on the breaking candle low. So that shows me that we had buyers interested and then the sellers just pushed down. It's below the opening range midpoint. So that gives you a better risk to reward and you've got more probability if the opening range trade is inside the bottom half for the short and the top half for a long. Are we going to continue this trade? The only thing I don't like on the opening range breakdown is this massive, you can see this delta now, look at this. Price is selling down, delta is pushing up. So for me, this is a conflict of interest in 2 strategies I have. My first strategy is the opening range short. My second one is the break of this trend line on an increase of delta, so delta divergence. So for me, I'll be looking for an entry over 67.65 long. So again, I only get in on green candles. I don't get in on a red candle. So I would not be interested in taking any longs while that's a red candle. It has to break it, ideally come back and retest. We could also be looking at this 2-minute head and shoulders pattern, inverse, left shoulder, head, right shoulder. If that sets up, then I'll be all over that. That will be my entry. I'm going to look at the comments. Crypic already partialed and break even. I just need to wait now. Good job. 212 got a short scalp there, out flat. Yeah, good risk management as well. And then Michelle, we broke the low of the 2nd of, sorry, my brain works in English dates, not US dates. I say English, UK dates. The 6th of February, not the 2nd of June. That's how I read it. that day had a fierce reaction at that level 2. It did, yeah, and I remember talking about that in the pre-market. Let's just go back to my chart so we can see it. Let's go to the hourly. It's always good to have a context of market. That one there, look at that big reaction. So yeah, I agree. So that's another reason why you got to be wary of always look to the left on the higher time frames. Good call, Michelle. I did actually forget about that. So another reason it wasn't quite an A++ setup. We like A++ setups. We like A+ setups. We like A setups. You know, when they start going into the B's and B minuses and that, then that gets tricky. That's usually against the trend. Look at the bounce here. Oh, look at that. Did I say inverse head and shoulders on the 2 minute? Are we looking at inverse head and shoulders on the 20 range? Maybe. That's our neckline up here. On the 2 minute, left shoulder, head, right shoulder could be setting up right now. Let's just keep an eye on that. 67.50 potentially. But look at this. If we break that trend and we get a big green cumulative delta candle, then I'm looking for a long. Very rarely have I seen this play not work. Again, I'm not telling you to take the trade, or I'm not saying we are going against the trend, don't forget, because we are in a bit of a downtrend on the hourly. The pre-market's downtrending, big downtrend. But look, we're showing a sign of structure change here. You know, the first thing we look at is that head and shoulders pattern. And then we look at a break and retest of neckline. Are we retesting this? Are we retesting this trend line now? And then we start looking at order flow. This is why we look at order flow, and we look at where we have more aggressive buyers, who's in control. You know, at the moment it's pretty neutral. The small candles on this delta on the right hand side of the screen. This shows me lots of momentum, lots of aggression, and then we're starting to see starting to show a bit of exhaustion when the candles get smaller. So again, definitely no long, and for me, no short at the moment, because we've got pre-market low directly below. But we've got clues we can watch. The market's really good as well, fake breakouts and breakdowns. You know, people see the break of this area. Oh, I'm going to get in long here. The market just whips you out. Then you think, oh, I'm going to take the long of that pivot. You get in, and then the market whips you out short, like it has done here. So, well, it hasn't really done because there was no entry. But you know, you just got to go with the most amount of confirmations. That's why I think an A++ setup should be what you'd be watching for at all times. If I go back 4 years, I was literally getting in on anything. I was a proper basically I didn't have any strategy. I jumped from strategy to strategy. I had no risk management. I had some really good days. I had some really bad days. I had some days where I hit like 50R, 30R regularly, but I took probably about a dozen or so paper cuts trying to get that 20R. You know, so that 20R is probably no more than 10R. Still good, but don't forget I had some bad days with that as well. I had no real strategy. I was just like, this looks about right. Now I'm pretty what's the word? I know what I'm looking for. I find it hard waiting. Patience has been tough, but I'll be patient and I'll wait. And if it doesn't set up, it doesn't set up. You know, yes, I had a couple of calls I thought would have been decent longs, and they would have stopped me out had I taken it, but I didn't because I was sitting on hands because I already took my trade. And then obviously it worked then the rest of the day. So my ideas were right yesterday, but my in my mind execution was a bit slow, a bit behind. So we're still selling off. If you're in that ORB, if we can break below this pre-market low, then that would be a great trade. So you should be a little bit in profit now. So what I would like to see we talked about the break and retest of pre-market high yesterday, which I took and then bottled it because I didn't want to see green turn to red, and it never even went anywhere close to red. So I bottled it, $100 per account, but still, I could have easily made $400 risk, could have easily made $800 per account at 2R. So, bit disappointed in myself. We still do have aggressive buyers coming. You can see on the cumulative delta on the right hand side here. 10 a.m. as well. Normally that's a change of market structure. I don't follow the 10 a.m. but I know a lot of people do. You know what, I just realised I've not had a drink for hours. I'm going to go and get a glass of water. I'm probably going to miss the best market action ever in this next few minutes. I will be back. Look at that. That's the trend line breaking on the 2-minute chart. Are we finding an entry? Maybe. See these bubbles? Green bubbles? That's potentially sellers absorbing all that buying pressure on a red candle. If you look at the delta, it's probably some big red deltas there. Let's have a look. Here we go. 217. 192. 111. There's any big deltas? 111, 140. So not massive amounts, but enough. If we just hover the mouse over, it should tell me what it is. 465 buyers down there, so the sellers will have absorbed all of that. What's the market doing? Seeing a bit of a bounce. Again, did we just call out that inverse head and shoulders pattern? Maybe it's a bit late. Maybe, you know, it's an adapting market. Maybe that's the left shoulder. This is the head. Who knows? Here we go. Cool display. Could have scalped that. The break of that trend line on an aggressive green bar. Could have been a quick, easy scalp. Look at the comments. From 212. Buyers are really keeping this up. They are. And then 212. Whoever is buying this is going nuts. Yeah. And here we go. Didn't last long. Look at that for the instant rejection. Pre-market lows holding though. And then let's have a look and see what SPX is looking like. Where are we? Oh man. When I said keep an eye on 6,800, yesterday's low, if we're going to open up around there, we're way below there. We're coming into 67.38 area. So 6,700, keep an eye on 6,700 below on SPX. We've got way off at the moment. We've got nothing to worry about as of yet, but if it's short, that's a potential area. Look at this. Look at this. This is good to see. I like seeing things like this. Aligned point of controls. We've got three there next to each other. We've got another three there. Talk about setting an area of resistance or support. Depends which way the market goes. We have got some aggressive buying coming in. We are still looking good for the long. Well, I'm saying that, looking good for the long. We need to just continue this cumulative delta divergence. We've got this area, so that 67.47 area where we had a line point of controls in that area. We rejected it right in that same place. You might even find the market might just gravitate around that area if it's an area. So it's pre-market low. The opening range still looks good at the moment. Hasn't come into its stop area or even close. Maybe got to about half an hour when we had a pullback. And there's no clear break and retest, by the way, of opening range. The one yesterday was as clear as day. Let me just zoom into yesterday. yesterday's opening range was here. We broke out, we came back, and that was the opening range bounce 67.47. So you couldn't be any clearer than that. That's the air gap I like to see, but we're not seeing that right now. We kind of retested the opening range. So we've got news coming out. We've got these little green lines, just says that's medium volatility, low volatility news. That's why they're displayed on the chart as a reminder, not high volatility. So Delta, we've got a few aggressive sellers coming into the market now. So that Delta break would have been a good scalp. Didn't see how many ticks we would have got from that. Where was it? About here. The break of that pivot there, we could have easily got, if we were waiting for the break of that candle, the 2-minute candle, could have got in here. Lots of positive deltas. Yeah, could have easily got 20 ticks on that and some. So that would have been good. So that play did work as a scalp. Again, if you're looking at it on a more longer term, which is what I'm doing, I'm waiting for a close above that trend line. And then I'm looking to get in on a green candle. So you could have scalped the break of that trend line like we saw there. But for me, I'm looking for a close, a solid close, and then I'll be looking at the 5-minute chart for the entry. But we are starting just to slow down now. Remember, price usually follows delta. That's why this trend's in place. Here we go. So we are breaking that trend line again. So our trend line, select where you want to draw the trend line. Could be anywhere along there. It's a zone, not a line. You want to see it also break the previous candles on the delta as well. Here it comes. Sellers are really trying hard, but no follow through. That pre-market low is proven to be a big place. And do you remember when I said about ORB, I want it to be breaking pre-market low? This is the exact reason. I want to see ORB take out multiple significant levels like pre-market low, yesterday's low, but it didn't. So it would have been an A+ setup had we seen it set up like that. That's an A+, but it's like an A- at the moment because it couldn't take out pre-market low. I'm not saying it's not going to work, it just makes it harder because it's an area people were defending. You have to think about it. Pre-market low, the Asian market or the UK market, they were defending that area because it was the pre-market low. So why would they not be defending it again now? Some of these institutional buyers will put big money in at these big pivot areas, so they're not going to give that up lightly. We're putting in a bit of a flag here, that kind of pattern. But we saw the big buying and selling candles coming in on the order flow back down in this area as well. So lots of absorption there. There's a battle right now. Buyers versus sellers. Buyers, in my opinion, look a little bit on the stronger side because of that really clear cumulative delta divergence. As you can see, we've got decline in price, increase in buying pressure. And I see this as like an elastic band. We're winding up the elastic band, winding up. Prices decline, and then suddenly, boom, the elastic band snaps and we take off. But patience and risk management. Because like I said, I only go long on green candles, short on red candles, whether it's order flow, footprint charts, 2-minute charts, or the 5-minute. I'm not comfortable getting in on red candles long anymore. I used to, but it's always like finding the falling knife. It's just so difficult to play sometimes. Unless you've got a big account and you can absorb a lot of pressure as we're selling off, keep buying at all these levels, and then the price turns out and you've got a better average price. But I like to think I'm looking for that precise entry, and that involves going with the extra confirmations rather than just averaging in. which is okay, but not how I do things anymore. Because too much mind fog. Because you know, averaging in, say you got a risk of $100 and you're averaging in $50 at a time, you're just blowing your risk within the first couple of averages, and it goes against you. What do you do? Average in again. You're not really averaging in at that point. You're moving your stop. You're kind of changing the rules of your play. You know, I always think if I'm getting into a trade, I need to know my exit, I need to know my target, and I need to know my entry. And I talk about it even on these footprints, which are moving ultra fast sometimes. My first thing I say is I'm waiting for a break of that pivot. And then if it breaks it and I miss it, I'm not chasing, I'm waiting for it to pull back into that pivot. That is, you know, that's me knowing in ahead, well in ahead, what my entry is going to be. So it's kind of pre-planned. I don't just get in because it looks good. I used to, and it never ended well. Look at this, Delta, still got some aggressive buyers coming in. So are we putting in a bottom here? So we've got 212 long at 67.43, scalp 5 points, good job. 67.43. Let's just find that on my chart. Is that just, you just got in just a few seconds ago, yeah? 43, or was that earlier? That point, that place there would have been fully earlier. I think that's what you meant. Around there. Yeah, 3 minutes ago, that place there. I was saying there's not enough points available at the moment at that same location. So good out. Hopefully you're out now. Good trade. So we've got, look at this, point of control at the bottom of a candle, at the end of a trend potentially. We've got small negative deltas, bigger positive deltas. So to me, that shows aggressive buyers and lack of interest from sellers at the moment. So potentially we might be looking at a long, but potentially, you know, we're looking for a break of trends. You know, this could be a scalp long right now, but I'm not scalping. I've done my scalp for the day. This is my risk management in control now. You know, I could have got in actually on the break of that pivot. Could have been up 10 ticks. Again, not ideal. Maybe on that buy setup down here would have been 20 ticks. So we've broken this 2-minute trend. Let's see where this candle closes. And also waiting for break of trends just slows you down a little bit as well, stops you from rushing in. Next question is, do you want to go long in a downtrend? Look at this 15-minute chart. Big, serious downtrend. So maybe a double bottom. We've watched the, here we go, top and tail now, so not that convincing. We've watched a 2-minute break trend and then go sideways. We've got Cumulative Delta putting in strong higher highs. 15-minute, definitely not breaking trend. If you want the ultra conservative approach, you can watch the 5 and 15-minute and wait for that trend to break. And that'll be that 67.90. Me, I'm probably not going to take any trades. It's now been a whole 45 minutes since the market's opened. And I'm probably happy with going to my rhythmic. It's crashed. Oh, it has crashed because I've got my screen overlay on. Okay. So 1, 2, 3, 4, 5. That's a $3,500 day on my paid accounts today, which is not too bad. So maybe that's a sign to walk away. And then I could show you, I'm sitting in a darkened room at the moment. It's glorious sunshiny weather, but the sun's shining in on my screens and it's really hard, give me eye strain if I stare. So I used to suffer from really bad migraines through my screen glare. So I don't want to be sitting in a darkened room much longer, so I might just call it a day. Market's kind of putting in a bit of a bottom at the moment. I'm not sure what's going to happen. It's kind of topping tail, bottom tail, indecision. Pre-market low seems to be the place to hold. Cumulative Delta I still like it for a long, by the way, purely because we've got aggressive buyers coming in and something's being absorbed. If the sellers absorb all these buyers, then and the buyers lose traction, then we're going to see another leg down, and that ORB short will be a great short. But if the sellers start showing lack of volume, just keep an eye on the volume candles. If we have a red candle with less volume, then that's the sellers are starting to show weakness. Then maybe, or exhaustion, should I say, then maybe the buyers might take full control. I've not looked at any others today. I'm not sure what Nvidia's doing. It's kind of smack bang in yesterday's range. Nasdaq is looking a little bit stronger than ES because ES is putting in lower lows but Nasdaq it's not taking up pre-market low at all. So 2 indecision candles on relatively high volumes. That means we've got a battle, buyers and sellers. Okay, so we should see some more buyers down here. We're going to move over that bubble. That's gone. Here we go. 129 sellers. Right, I'm going to call it a day. Hopefully this ORB works. If it does, good job. You've got to be close to about 1/3 of an hour right now. It's a tough one. We just want to see follow through when you take these. And although we do have increase in red volume, we do have similar green volume. So it's a battleground at the moment. So I will be back tomorrow. I'm watching for a potential break and retest of pre-market low. That would be my other play. I do watch that as well. These are breaking off these major levels, and if we do get below, just going back to cumulative delta divergence. Now here's why we wait and we're patient. Aggressive buyers come in. Look at that. We're really happy with that. Cumulative delta divergence. Then we just went sideways. We didn't see that push like we would expect, a break of trend. And then remember I said about it's a battleground. Either the sellers or buyers are going to win. Looks like the sellers are now exhausted. You can see that. Look at the small selling delta there. There's another small one there. So the buyers are getting more aggressive and now they're taking control and they're taking out the low. So right now we are looking like sellers are in control. But let's see, we're still holding this pre-market low area. We need a nice big push down. So good job with any ORB shorts. If you're in it, looks like it might be taking out the low, so it could be a good play. So we're just saying that we didn't see many aggressive sellers coming in, and then they're just starting to show up now. Look at this, good. So what's the ORB now? If we were to enter, so about half an hour. So it's around about half an hour now. So 1 hour is around 67.20. 2 hour would be around 6,700 psychological area. So good target that would be. Me, I would have my target just in front of it. You know, maybe 3 or 4 points, 3, 4, 5 points ahead, and then maybe hold a runner. but that's a good job if you're in the short. I'm kicking myself, but I don't care. I've done my trade for the day, so I'm more than happy. So this would really be for building my eval counts up. Okay, well, I'm going to call it a day. I'm going to go enjoy our glorious spring with the nice sun out right now. And I will be back tomorrow, 9 a.m. Eastern Time or 2 p.m. here in the UK. Appreciate everybody watching. If you haven't already, please leave a like. Also, don't forget to hit the subscribe button. I'm going to try and do that compilation of all these pre-market scalps because it's easy to see 10 or so of them all in a row rather than trying to go back, because I like to see patterns after patterns, repetition, and I think that's a good way of seeing how it all works. Sunny, thanks for the session. You're welcome. Crypick, thank you as well. Have a good day. Remember, A+ setups only. So I will be back tomorrow. Thank you for watching.